Hello and welcome back. My name is Jamie Mordaunt. Now, every month we sit down and we give you our top picks for that month. Now, I want you to go back and look on January and February and see exactly how we're doing, because we're coming into March, and here is my top 5 picks for you to invest into March. So what is my first pick for investments that I think you guys should go into in March? Well, it's one that we've all heard of, and it's one we probably all use every day, and it's the second largest transactional company in the world. Who is it? It's Mastercard, ticker MA. So Mastercard is currently trading at $367, which may seem a little bit high, but I don't think it does. It's had a low of 199. Now that was when the pandemic hit and people couldn't go out there and spend money. They were starting to get onto the online stuff and work it out. But as soon as they've done that, it soared back up and it's continually grown over the last 12 months. And I think it's going to carry on doing that for the future. We're all going to use credit cards and your switch cards and whatever else they are. It's how we spend money. Now, one of the reasons I love Mastercard is because the profits ratio of 41.7%. It's fantastic and something that all companies need to try and adhere to. Now, Mastercard is a cash cow. It's something that you do need to go into, because if you look at the fundamentals, they are good. In Q4 of 2020, they outshone what their predictions were, and they made $4.1 billion in revenue. You can't turn your nose up at that, can you? And you know that I'm into my crypto side of things, and that's something that Mastercard is saying going into 2021, they're going to start facilitating crypto transfers. They're all coming together, as I keep on saying. So my second pick is going to be a company called Avalara. Now, they are an automated tax system. They help companies out. They make sure that their taxes go through automatically and done correctly. Now, their share ratio has been down at 50 in the last year, which is ridiculously low, but they've grown significantly over the last 12 months. And if you look at the growth, it's steadily going up, and I think it'll carry on doing that for the next 12 to 24 months. This company is one I think will make us some money. Although if you look at the fundamentals right now, they're not in profit, which can have an impact, but as you see, a lot of the major companies aren't either. So as I said, their operating losses have gone from 5 million a year to 1 million a year. So it's going in the right direction. And with operational profits at 35% per year, year on year, you know it's going to make some money in the future. And one of the keys to making a company successful is the acquisition of other businesses. Now, they've just been put into by Imposia, which I think will only benefit them over the long term. Maybe not in the next 12 months, but in the next 24, 48 months. So yes, this company is priced a little bit high at the moment, but I do believe it's one that you should have in your portfolio. So when you do see those dips, I would buy in. Perhaps not right at the peak, as we are right now, but when it drops down a few percent, chip away at it, put a bit more money into it and let it grow. And my third pick for March 2021 is Zendesk. Now, this is a customer relationship software. I love this because every company needs this, and if you want to grow and you want to help your customers out, you need to have a software back of house system that is going to help you to fulfill your customers' needs. Now, where's this company come from? It's been going on for 5 or 6 years now, and it's got a profit margin every year of 20 to 30%. It's continual growth. Now, as with a couple of others, it's not yet in profit, but it's moving forward and it's progressing, as they say. And they're actually acquiring businesses again. You've seen the correlation again? So Zendesk are currently trading at $150 with a low of 55 and a high of 166. It's continual graduation moving upwards here. It's taken a little dip in the last few days, but do we care about the last few days? No, we don't. We are thinking longer term. And with most of the stocks we speak about, we saw a huge low at the beginning of the COVID situation, but we've seen almost linear growth since then, literally like this. That's the direction we like. So one of the new things for Zendesk is the availability of Zendesk Suite, which is all their applications available to everybody, not just the few. This is a great thing for everyone, and it's going to mean more people buying their software, which means more profits for us. And my fourth choice is one that we have spoken about on a regular basis, and it's one that I have said let's buy into in January, in February, and I'm going to say let's buy into it in March. Just because it's gone down a little bit in the last month, it's a perfect time for you to buy in at this dip. And that is Apple. We all know Apple, we all love Apple, and I think we're going to see some absolutely fantastic gains this year. Reasons why? 35% of iPhone users at the moment are due for a renewal of their contracts and upgrades of their phone in 2021. 35%, that's a huge amount of phones that are going to be sold. And with the new M1 chip that we spoke about previously, plus all the new other technology stuff they've got coming out, I think Apple is a great investment to buy into. At the moment they're trading at about 135. Back in March last year they were trading at 55, but I see that going up to 160 odd this year, 170 perhaps. This is a great time to buy. Buy in at this dip and let the profits roll. So what have we got for our fifth choice? Now, we're going to go with another one that I have recommended over the last few months, and that's Palantir, but not for the same reasons we've spoken about in the past. Now, we've seen their CEO had filed that he had sold a lot of shares and he's made quite a bit of money on what he has sold, but he's done that because he just wanted the cash. He's like me and you, it's all about making money, having money to go into other things. So that doesn't worry me. We've seen the shares drop down because of this, but he's still got 2.8 million shares in there, and that's a lot of money at about $30 a share. Now, it doesn't worry me. It really doesn't. I still see the fundamentals of this company that going forward, it's going to be an extremely profitable company, and I think where the price is right now, we've got a buying opportunity. This is one of those investments where you are buying in a low price and we know it's going to go higher. So I would get your money in now. A lot of the stocks we speak about are already at a high, and we're saying, when it dips, buy in. This is down quite low, and I don't think it's going to go any lower. I think now is the time to get some money into Palantir and start making really good profit on your investment. Hey guys, look, I love doing these videos for you all, but tell me what you want to see. Is there an investment you want me to research into? I've got my entire investment team here that can help you look into investment. So tell me what you want, what your aims are, and let's build a video together. Thank you very much, guys. Please like and subscribe to my video. And if you don't want to talk to me here, contact me on LinkedIn. Check out the link above. Click on it. I'm always there to talk to you.